Hello, and welcome to the Austin Police Retirement System Education Seminar Virtual Edition. My name is Michelle Ruland, and I'm the Benefits Manager for the Austin Police Retirement System. While in this video, I will be providing a summary of the various aspects of the pension plan. Please keep in mind that all provisions and limitations may not be fully described as they apply to individual situations. Please contact the system directly to have individual questions answered. The APRS staff is headed by Patty Featherston, the Executive Director. Stephanie Willie is our Deputy Director. Myself, Michelle Ruland, is the Benefits Manager. John Poth is the Finance Manager. Deborah Esparza is the Benefits Specialist. And Jennifer Gramon is our Office Administrator. Throughout your career, you will hit various retirement milestones. The first milestone is achieving vested status at 10 years of service. At 20 years of service, you can purchase service credit to become eligible to retire. At 22 years, you may pre-select a survivor annuity. And at 23 years, in most cases, is when you will become eligible for retirement or drop. At 10 years of credible service, you become vested. That service can include approved proportionate retirement service credit. If you leave the police department, once you are vested, you can get your contributions in the system, leave your contributions in the system, and begin drawing a monthly annuity at age 62. You may also be able to draw that annuity at age 55 or at another years of service if your combined proportionate retirement service is at least 20 years of service. If you were a cadet prior to 1998, you may be able to purchase your cadet service. If you were a cadet after 1998, there is no need to purchase your cadet service since you contributed from day one. If you were a member of APRS and then separated service and refunded your contributions, and then came back to the department, you may be able to reinstate that forfeited service credit by putting back in your contributions plus interest. If you're granted a leave from the police department where you did not use sick or vacation time for a uniform leave of absence or military leave of absence, you may be able to put back in those contributions upon returning from that leave of absence. Another service purchase is our pre-membership military service credit. You may purchase up to 2 years of federal active military service. The pre-membership military service does not count towards your 23 years of eligibility, but it would add to your benefit after. So if you left at 23 years of service, your benefit would then be calculated at 25 years of service. If you were employed prior to February 1st, 2016, then you can purchase that service at any time. Members employed after February 1st, 2016 will be eligible to purchase that pre-membership military service once you are retiring at the full actuarial cost at the time of retirement. The last service credit purchase available is permissive service credit. You may purchase up to 5 years or 60 months of permissive service credit once you reach 20 years of credible service. There are a few different types of permissive service credit. Type A is the costliest type of permissive service credit, and that's the type that gets you to eligibility. So at 20 years, you can purchase the 3 years you need to be eligible to retire, and that's going to cost the most of any type of permissive service credit. Type B is the cost for additional years beyond retirement eligibility. So at 23 years or beyond, you can purchase the Type B permissive service credit to get you additional years of service credit, up to 60 months. Deferred permissive service credit is basically the Type A, the type that you need to get you to eligibility. You can purchase up to 3 years and defer your annuity for the number of months that it you need to be eligible to retire. So at 20 years of service, you can come in and purchase 3 years to get you to eligibility. Instead of collecting an annuity immediately, you wait that 3-year period and begin collecting your annuity 3 years later. This significantly reduces the cost for those deferred annuity payments. Payment methods for purchasing credible service of any kind. You can use a personal check, a cashier's check. You can do a rollover from your deferred comp plan, the 457B, or any eligible rollover that is a non-Roth account. Please keep in mind, if you are going to use deferred comp funds to purchase service, it has to come from a non-Roth account. In order to purchase military service, you will need to provide us with a copy of your DD-214. It has to be an honorable discharge. Your service must have been active duty, not reserve, and you cannot have purchased that service at any other proportionate retirement plan. You cannot count that service twice. Permissive service cannot be used for eligibility in retro or forward drop programs. So if you're going to enter the forward or retro drop, you cannot purchase permissive service credit in addition to those programs. You purchase permissive service credit at the time of retirement, and it constitutes immediate retirement. Every service purchase must be done before you separate service with the department. Please contact us at least 30 days ahead of time to get those purchases moving before your retirement. Proportionate service eligibility. You may be eligible to have your service in another Texas retirement plan counted towards proportionate service for eligibility. Those participating systems include us, the Austin Police Retirement System, the City of Austin Employees Retirement System, COERS, the El Paso City's Employee Pension Fund, Texas Municipal Retirement System, Texas County and District Retirement System, the Employees Retirement System of Texas, including both judicial systems, and the Teachers Retirement System of Texas. These systems will allow you to combine the service credit with our service. So if you had, say, 18 years of service credit with Austin Police Retirement System, and you had 5 years of service credit at COERS, you would then be eligible with the 23-year service credit mark. It only counts towards eligibility, will not count towards your pension benefit. If you have service at TMRS or TCDRS, you do not have to have your funds on deposit with those systems in order to use that time for proportionate service. And that's because they don't recognize our service proportionately. So at any of the other systems, you do have to have your funds on deposit at the time of retirement in order to use that service credit for proportionate eligibility. Those systems in turn will recognize our service for eligibility in their system. If you think you have time at one of these retirement systems and want to get it put into your record at the police retirement system, please contact us and we will assist you with putting that time in your account. Here's an example of the proportionate retirement benefit. So if you did 18 years with APRS, your pension benefit may be $3,962. And if you did 5 years at the city retirement system, your pension benefit may be $600. Combined, the 18 plus 5, you're now eligible to start collecting your retirement benefit with a 23-year pension. Some of that will come from APRS, some will come from COERS. These numbers are just examples, but represent a good way to think about proportionate retirement. You are eligible to retire at 23 years of service at any age, or if you have 20 years of service at age 55. You can be eligible to retire if you're age 62 with any amount of service. You can reach eligibility sooner with service in another Texas Proportionate Retirement Program or with the purchase of cadet and permissive service credit. Military service purchases, again, do not apply for eligibility, but do increase the calculation. Our multiplier is 3.2%. So if you take your years of service times the multiplier, 3.2%, and we use your highest 36 months average salary over the last 10 years to calculate the benefit. So for example, if you do 23 years of service times 3.2%, you'll be getting 73.6% of your highest average 36-month salary over the last 10 years. If you did 30 years of service, you would have 96%. We don't have a cap at 100%, so you can technically make more than 100% of your salary in retirement. There are several annuity options that you can choose from. The previous example gave you the formula for the life annuity member-only benefit. This benefit does not provide a survivor option and would cease upon your death. If you want to cover another person in your benefit, you can choose to take one of the survivor options. There are 5 different survivor options. The 100% joint and survivor is the biggest reduction from the life annuity, but gives the other person that you cover 100% of your benefit upon your death. We have a 50% and a 66 2/3% joint and survivor annuity. And then the second 66 2/3 option is where the member is the one to go down if the survivor were to pass away. So the member's benefit would be reduced if the survivor passed away. In the other options, the 50% and the 66 2/3, the member stays at their, as well as the 100%, the member stays at that full amount for their life. They do not take a reduction if their survivor were to predecease them. And in option 4, the member does take a reduction of 66 2/3% if the survivor predeceases them. Option 5 is our 15-year certain and life annuity that provides a pension benefit for 15 years only for the survivor. If you were to pass after 14 years, that survivor would only receive 1 year of pension benefits. The selection of who you choose for your survivor is an irrevocable option. APRS does not have a pop-up provision if your survivor predeceases you. There is some confusion between a death benefit beneficiary and a survivor. So for a death benefit, we have a death benefit if an active member were to pass, they receive twice the balance of their contributions to the system with a $10,000 minimum. At the death of a retiree, the death benefit beneficiary would receive $10,000. The listed beneficiaries can be changed at any time through your career and your retirement, can and should be updated. We cannot stress strongly enough to please keep your beneficiaries updated so that we can pay out the person that you intend to pay should something happen to you. You can list multiple beneficiaries and determine a percentage of each beneficiary. Please also keep in mind that there are several different beneficiaries that you'll need to keep up with throughout your employment and even after. We have a separate beneficiary from the City of Austin for their insurance plan, and Empower also has their own beneficiaries for the 457 plan. So you may need to update your beneficiaries often and with each individual entity. The annuity survivor, on the other hand, is the selection of the person that you want to continue your survivor annuity. So just like in the options on the previous slide that I was talking about, you select one person at retirement to receive a portion of your annuity. Once that annuity option has been selected and the survivor has been designated, that becomes an irrevocable option. That person can never be changed. The annuity survivor does not have to be a legal spouse. It can be anybody. There are certain limitations on who you can choose, but it does not have to be a legal spouse. If you choose a non-spouse for the continued annuity, there is a reduction if the survivor is more than 10 years younger than the member. If the member is 10 years or less, then there's no restriction. If the member is more than 10 years but less than 25 years, then they can only receive the 66 2/3%. If the member is more than 25 years younger, then the reduction is 50%. They can only choose the 50% joint survivor option. Once again, please always maintain a current and completed beneficiary designation with the system. You can submit a form online at our website, ausprs.org. If you click on the Member Resources tab and then go down to Beneficiary Designation Form for Death Benefits, that information can be inputted electronically. It comes to us via encrypted email, and we will always send an email to you confirming receipt of that change. If you ever receive an email from the system saying that we changed your beneficiary and that did not come from you, please reach out to us immediately. So, once again, if you updated your beneficiary with HR, why doesn't the system have it? That's because we're two separate entities. Each requires its own beneficiary forms. Please do not assume that we share information. Deferred Comp Plan, managed by Empower, also has a separate form, and their phone number is 512-457-9240. Please update your beneficiary with each entity directly and follow up by phone to check to see if it has been received and recorded. A lot of people will ask, what's my break-even point? The point at which my pension benefit becomes the same as I'm taking home as an active officer. Generally speaking, that happens somewhere between 25 and 26 years of credible service. And let's explain how that happens. In retirement, your annuity does not deduct the 20.65% for local and federal retirement contributions you paid as an employee. You're currently paying 13% for the Austin Police Retirement System contribution and 7.65% for Social Security and Medicare. Keep in mind that this is base pay only, and the retirement calculation does not include overtime pay or soft pay. It's different for everybody when you reach that break-even point, because if you do a survivor option, that will impact the amount that you take home in retirement. If you do a drop, that will also impact the final annuity. Several factors can play into where you break even, but generally speaking, somewhere between 25 and 26 years. And yeah, you can always ask the system for a net pay calculation to help determine what that point is for you individually. The Retro Drop is a program for members who had at least 23 years of credible service by March 31st, 2015. Proportionate service is allowed to count towards that eligibility if the service occurred before March 31st, 2015. Pre-membership military service cannot count towards the retro drop eligibility. You can retro drop up to 36 months of service. So what the retro drop does is service above 23 years can be dropped in a backwards manner. So if you had 26 years of service before March 31st, 2015, you can drop up to 36 months. So you can drop your pension benefit back to 23 years. So instead of having your benefit calculated at a 26-year pension, you're now having it calculated at 23 years. We essentially say that you have been retired for those 3 years instead of working. Your benefit is calculated based off of 23 years, and all those pension payments that would have been paid to you had you retired at 23 years are banked in a lump sum account, along with some interest and contributions. So those 36 months of payments are now put into a lump sum account that is available to you when you retire. The retro drop is a retirement option that you choose at the time of retirement. You don't sign up for the retro drop in advance. The forward drop there's two types of forward drop, the 5-year program and the 7-year. We'll go over both in detail. The 5-year program is available for members who had at least 23 years of credible service by February 17th, 2016. The forward drop is something that you sign up ahead of time. So it's not done at the time of retirement. It's done 5 to 7 years before your retirement. So once you have at least 23 years of service, you can enter into the forward drop. You continue working while you're in the forward drop. You continue making contributions to the system during that time. Proportionate service does count towards the eligibility, but pre-membership military service does not count towards the eligibility needed for forward drop. The maximum amount for the 5-year forward drop program, and again, that's available to people who had 23 years of service as of February 17th, 2016. You come in and sign your retirement benefit. You choose your survivor option. That option is irrevocable. You have that amount, say that's $5,000 a month. Instead of us retiring you and paying you your annuity of $5,000 a month, we're going to bank that in a lump sum account for you. So each month we will put in that $5,000 into the forward drop account. We're also going to put in for the 5-year drop program your contributions to the system during that time and interest, 5% if you had 23 years of credible service as of July 31st, 2015, and an annual variable rate, which is currently 2.25% if you had 23 years of credible service after July 31st, 2015. That variable rate is determined by the rate that we pay the prop accounts. So that is can vary annually. So in that account, the forward drop, we're putting your interest, the contributions, and the monthly annuity. You can participate for up to 60 months of time, at which time you will have a lump sum. When you retire and actually separate service, you will choose what to do with that drop lump sum, and then you will start receiving your annuity. The 7-year forward drop program operates very similarly. It is for members who have 23 years of credible service after February 17th, 2016. For the 7-year forward drop, we still calculate your annuity and put that in a lump sum account each month. Unfortunately, member contributions are not put into that account, and there is a fee associated with that account. The 7-year forward drop does not earn interest, and the fee is a graduated fee. The first year, it's 25%. The second year, 20%. The third year, 15%. The fourth year, 10%. And the 5th through the 7th years are 5%. So let's look at how that would look going into the forward drop. In this example, the monthly annuity is $6,209.46 prior to the fee. In that, each month we will put the drop fee. This first year, it's 25%, so $1,552.37. That leaves an adjusted monthly annuity of $4,657.09. That is what goes into the account each month for the first year. You can see the second year, the fee goes down to 20%, which is $1,241.89. And then by the 7th year, the fee is 5%. So you can see in this example, even after 7 years of being in the drop, even after the fees are taken, you're left with quite a substantial drop lump sum. To get an individualized calculation on any of the options we just discussed, you can first try our online benefits calculator. If that doesn't work, you can submit a benefits calculation request form. If we have an exceedingly numerous request, we will impose some limitations on the amount of calculations that we are able to send. For the website calculator, you can go to our website, ausprs.org, click on Member Resources, and then Calculator. From there, you can put in your individualized information. You can project your salary, what you think it will be at the time of retirement, your retirement option, your service, and it will give you a calculation of what the annuity, and if you choose to do a drop lump sum, it will show you what the lump sum will be as well. The 7-year forward drop is on there. The 5-year is not on there. So, and the retro drop is not on there as well. You will need to contact the system if you want one of those calculations. You can put in proportionate service, and you can calculate retirement at 20 years with age 55 or age 62. If you would like a net pay calculation, meaning after taxes and insurance, you can contact the system and we can provide that for you. If you need the net pay calculation, we will ask you a series of questions on what you will be selecting for retirement, insurance options, and who you'll be covering under the insurance, and then what your tax withholding, and if you're going to do a prop deferral, we'll ask that as well. That way we can give you a more accurate net pay calculation. If you have a divorce and have a qualified domestic relations order, we ask that you please provide us a copy of that order, which shows the award to your ex-spouse, so that we can calculate your benefits accurately. If you are going through a divorce and are going to have a qualified domestic relations order filed, we ask that you please send us the draft ahead of time. We have a model Quadro available on our website. And before you get that signed with the court, please send it to the system. We will get legal approval on the language inside the Quadro, and then you can file it and send it to us. We do not need copies of the divorce decree. Again, the model is on our website. Depending on the terms of the Quadro, the drop amount may be affected by a divorce. Usually, the ex-spouse is assigned a portion of the retirement attributable to the time of the period of the marriage. The portion of your retirement paid to your ex-spouse will begin when you actually retire from the police department. You cannot pay your ex-spouse a portion of your benefit prior to separating service. Again, send us a draft before court proceedings and we will get legal approval. If you feel you become disabled during your employment with the police department, you may be able to apply for disability retirement. We ask that you reach out to us to have an individual conversation about disability retirement, so that we can go over all the ins and outs of the disability retirement program. But in short, if you are unable to perform your employment duties due to medical or emotional restrictions and have a diagnosis for that, the board may be able to grant you disability retirement benefits. These benefits are reviewed annually. If the injury was determined to have occurred on duty, the disability may be calculated using 20 years of credible service. If the disability was off duty, first you have to be a vested member in order to, meaning having 10 years of service or more, in order to be eligible to collect off-duty benefits. And those disability benefits will be calculated using the actual credible service earned at the time of the granting of the disability. Again, please contact the system if you feel that you want to go over the disability retirement process. After you're retired, you may be eligible to participate in our PROP program. And PROP means Post-Retirement Option Plan. Any retired or retiring members who have not previously closed a prop account may be eligible to participate. You may be able to roll over your drop lump sum. So if you've done either of the forward or retro drop options, one thing that you can do with your drop lump sum is to roll it over to the prop account. This is a tax-deferred plan for lump sum and deferral of your annuity. You can also choose whether or not you have a drop and had a lump sum. You can also choose to put in $250 or more of your annuity into the prop account. So while you cannot participate in deferred compensation as a retiree, this is sort of the system's way of allowing you to put your money in a tax-deferred account. $250 or more can be banked into the prop account. The amount you bank can be changed twice per year. There's no maximum amount, only the maximum is your full annuity. But once you stop deferring, you can never start again. So you can go up and down between $250 or your whole annuity. You can change that twice per year, but once you stop, you can never start again. The current interest rate is 2.25% on the prop account, and that is set by the board annually. If you have a prop account and want to take a distribution from your prop account, you can take $2,500 or more of your monthly annuity after your lump sum has been in the account for 90 days. You can take 2 distributions a year. If you want a 3rd distribution for the year, you do have to close out the account and move your money elsewhere. The disbursement can be either rolled over into another tax-qualified plan, such as an IRA, or it can be direct deposited in your bank accounts. Paperwork requesting the distribution must be submitted and approved prior to the 15th of each of the month that you want the prop distribution to occur. You cannot re-enter the prop once the account is closed. There are some tax considerations for both the drop and the prop. Any lump sum payment from the system has a mandatory 20% federal income tax that is withheld by APRS, and the disbursement amount may be subject to an additional 10% tax penalty for an early age withdrawal when your taxes are filed. If you exited the drop plan prior to age 50, so if you were less than 50 when you separated service, you have to roll your distribution to another qualified plan to avoid this 10% tax penalty. So we will not pay you a direct distribution to yourself if you were under the age of 50 when you terminated service. If you were under the age of 50 and separated service, once you are 59 and a half, we can then pay you a direct distribution, but anything before 59 and a half must be rolled over to another tax qualified plan. If you were at least age 50 in the year that you separated service, the public safety exemption for the 10% penalty will apply. So you will not be subject to that penalty. You will just be paying the 20% federal income tax on your distribution from the prop account or the drop account. Each year, you will receive a 1099-R for any lump sum distributions that you have taken from the retirement system. Additional retirement benefits. We discussed this earlier, but there is a $10,000 minimum active member death payment. The accumulated contributions, so all the contributions you've put into the system, if something were to happen to you as an active officer, your beneficiaries or estate would receive twice your contributions. Again, please always remember to keep that beneficiary updated with the system. Once you are retired, that death benefit becomes $10,000 tax-free death benefit. It will be paid to your beneficiaries. If you had a survivor option, then your survivor will receive the percentage of the benefit that you signed up for. So either 100%, 50%, or 66 and 2/3. And that survivor annuity would continue. The $10,000 non-taxable retiree death benefit. And then the city of Austin also has a death benefit for retirees of $1,000. You will need to reach out to the city of Austin to have more information about that death benefit and how to designate the beneficiaries for that benefit. As a retiree, you can exclude up to $3,000 of your income from your taxes for the public safety officer healthcare insurance premiums. This is done on your personal income tax return. That concludes our virtual retirement seminar. As you can see on this screen, our contact information is listed. Our phone number is 512-416-7672. You can reach the staff by staff@ausprs.org. Contact information for myself is also on the screen, as well as Deborah Sparza, our benefits specialist. Again, our website is ausprs.org. If you are going to have retirement, we are doing that virtually right now, but we still need the same amount of paperwork that we normally need. You'll need to set up a retirement, to receive a retirement packet from us electronically. When you request that packet, we'll ask for your last day of work, if you're going to choose a survivor option, do any service credit purchases, and doing drop and prop participation. So please have that information ready when you reach out to schedule a retirement packet with us. And please do that 30 to 45 days prior to your retirement. We cannot process retirement packets before 90 days. So if your retirement is more than 90 days in advance, please wait until you are about 90 days out before contacting us. When you return your documents, we will need copies of your marriage license if you are selecting a survivor option, both of your Social Security cards, both birth certificates, both photo IDs, a check deposit slip for direct deposit, and if you're divorced and have a qualified domestic relations order, we'll need that on file prior to generating your retirement packet. Again, please feel free to reach out to the system. I'll put the contact information up one more time. If you have individualized questions, we are always here to help. And thank you. Have a nice day.